All right, so let's do a bunch of examples. Now, as you can see, I have a variety of assets down here. This one's Amazon. So what I'm going to do is I'm going to start looking from the bigger time frame and coming to the smaller time frame. And I want this to be like a structure for you as well, to always start from a bigger time frame and come down to a smaller time frame. The reason for this is the bigger the time frame, the stronger that level of demand and supply or support or resistance is going to be. So think of it like big fish eat little fish, and the bigger the time frame, the stronger that level is. This is why working off a bigger time frame is the way to go. Now on this monthly, let's see, let me just sharpen this up a little bit and let's see how much we have. Well, as you can see, there's not a lot of data here on this one. On the monthly, let's go in there. Here we are. That's better. Okay, so this is Amazon going all the way into 2007, as you can see. Now the first thing to take a look at here, if we were to buy Amazon or look at purchasing at Amazon, is to look at the levels where the market had a heavy impact on buying. As you can see, this long wick comes straight into our site. It's pretty obvious there. A jump here, as you can see, is quite obvious. So if the market is pulling back, it's going to pull back into a place where we'd like to think about buying, especially like somewhere around here as well. This is like quite extraordinary. This is when the COVID came out, so the market dipped down and then all of a sudden went up and came for a retest and so on. So there are a few things here which we can actually draw out for ourselves, and if we were to invest, we'd take a look at them. Now long wicks are important and we should keep an eye out for them, and if you don't know how far of a long wick you should be taking, if it's obviously too long, and if you're just day trading or short-term trading, you can mark in a monthly level. It's not a problem. Okay, but at the end of the day, this zone is going to be very, very big. Okay, as you can see, it's like a big amount there. It's about $25, slightly more in fact, maybe 25. Yeah, about $25, $25 here. So if you're day trading or looking to short-term trade with leverage to take advantage of such levels, that's fine. Once you mark them in on the bigger time frame, you can always dip back down into smaller time frame. Now the good thing with this, or with these platforms, as you can see, is as you get into the smaller time frame, you'll be able to see and sharpen these levels up a little bit more. So if the market comes back into this zone, we're back in a buy kind of an opportunity that we'd like to look into. Okay, now as you can see, there are a few more levels now that we've gone down one time frame into the weekly. We have more bars in the system, and more bars in the system means, well, I might have a few more levels than I anticipated or expected. So let's make this a little smaller and see how things can actually pan out for us. Now one other place we can look at is this level here, or this zone. This is a place where the market bought, and as you can see, it broke above a resistance level. This is why knowing resistance levels, in my opinion, is important, because once they break out, you can identify what caused the breakout, and what caused this breakout is going to be a bar called a manipulation bar. A manipulation bar is the last red candle before the market is going all blue or green, going all the way up and breaking a level and closing above it. Once it's done that, it's clearly bullish. So when the market comes down, they're not wasting much time and they're going back in again. Okay, but for us, this bar now is also going to be an opportunity. Now you might be thinking to yourself, Well, there could be a bunch of bars as we go into the daily as well, which is true. Let's take a look at the daily and let's tighten this up a little bit. As you can see now, this thing's changed a little bit. Okay, now we've got this being the manipulation bar. So now I've got to take this bar into account. Okay, and as you can see, as soon as I've done that, see how that buy reaction came in on the edge of this bar and in this bar. Okay, so now you can see how knowing these bars where the market took off and broke out is very, very important. Okay, because that allows us to figure out where we're going to trade. Now here's an interesting thing. As you can see, the market here opened with a gap. You see, the bars sometimes open with a gap, and this is why leaving a trade on over the weekend can be dramatic if you all of a sudden wake up and find yourself that the market has opened with a gap against you. So what you have to do here is just make sure that, well, if you're going to trade as a day trader or a short-term trader, just I wouldn't keep positions open over the weekend due to these things. But if you're buying and holding onto the shares of a company, obviously for you that's not going to be too much of a drama because you're thinking of a long-term move. Okay, but at the end of the day, the important thing here is to mark these levels, and when you do mark them, for example here as well, let's make this a little bigger, and actually let me make this a little tighter first so we can see what's going on. And I'm just going to get rid of this green, not this one, but the red line there. Okay, so this is one bar, as you can see, where the market jumped up, so they're coming back and jumping up again, so they want to buy again. Now the same thing can be said for a sell operation. If the market is at a location where they sold heavy before and it comes back there again, we could be sellers. And in fact, what I will do is make this a little bigger and show you on this one as well. Let's go here. For example, this is a place where the market sold heavy. All right, we can take that and say, well, I want to trade this bar where they sold heavy, and I want to be a seller in here as well. Now if we're day trading, it's not a problem. Why am I taking this and not this whole bar? Well, for one thing, if I'm day trading, I don't want a price range that big on a daily chart. So if I want to trade it, remember what I said earlier, we want to sell high and buy cheap. So I want to keep it at the higher level of the bar. If I just push it here like this, okay, I'm taking the top of the bar. As you can see, a market came up here and just had a dip down before breaking back up again. Okay, so even if a person did enter a trade here, they might have still covered their stop and then would have been stopped out, obviously, since they're against the trend. But would it have been wise to sell here is another question. And the reason for that is we have to understand structure, which we will take a look at later on. As you can see, we have higher highs and higher lows. So this is clearly a trend going up. Shorting here would not have been the wisest idea. But if I did want to, that's the zone I would be looking out for, simply because I want to sell where they sold heavy. And this is also one of the big reasons we use swing day analysis and swing hour analysis, because we want to make sure that we're trading on a swing day or a swing hour. Okay, so let's take a look at the 4-hour chart as well. Let's go one more down. And this is the 4-hour chart. Now on the 4-hour chart, you can see here that we've got this bar and this bar. Now the lower I go, obviously I can say to myself, you know, this is the price zone I'm waiting for. If it comes into this bar, I will go up, and that's also an option. As you can see, it hasn't come there yet, but if it does, there will be some buyers wanting to buy. Why? Because as you can see, the next 4-hour bar is right up there. You see how nicely it opened up in New York at 4 o'clock. This is New York morning, so the market opened up at 9 a.m. and it just shot straight up, as you can see. So this zone is slowly beginning to make sense, and buyers are coming in. So the smaller the time frame, the weaker, but the sharper, because the bar is getting smaller, so your zone is going to be smaller as well. But if you pick a point on a bigger time frame as well, you can narrow it down. You can narrow the same bar into smaller chunks. So depending on whether you're a long-term or a short-term or a day trader, you will have to pick up those bars. The same thing will happen for anything. You know, whenever you want to sell as well, the same thing will happen. Once the market starts to sell, we're going to look at market structure. Once they start to sell and they start to close below support after they broke it, then obviously up moves are going to be a sell opportunity, which we're going to keep an eye out for. Clearly now the market is going down, so if I did want to sell, when the market comes up, the locations that I'd be looking to sell at would now be the opposite. So I'd look at a place, for example here, where the market sold heavy and they broke that support level, closed under it. Okay, so if the market comes back up here again, this is going to be a sell opportunity for us, okay, in this zone. So marking these levels in, there are a few other things we're going to take a look at, but marking these levels in, support and resistance, demand and supply, is going to give you an idea as to where the market can be bought or sold. Let's look at some more. We're going to need a lot of practice. Now that was Amazon, but we can do it on a cryptocurrency as well. Let's take a look at Ethereum. Now as usual, I'm going to start with a big time frame and see how we go, and start looking. Now here's a nice one. See how the market started buying here, and all of a sudden we've got 4 blue bars which have caused a breakout here. Okay, so the market bought nicely in this zone, started pushing up, and this zone here would have been a place where the market would have got in to buy. Okay, as you can see, this red bar here on the weekly allowed the market to break out. So that's the manipulation. The last red bar before the breakout of this resistance is the manipulation. Now look what happens. The market comes to that line, to that bar actually, and it keeps bouncing off. And then just goes up. It taps into the same bar again and goes off. Does the same thing again, and now it breaks down. Here is a good example of what we should be looking out for as well. If there is a zone and it's been tapped into a lot of times, it means the buyers are exhausted. And as you can see, after a while, no more buyers are left in this zone, so the market just starts to break. So this zone is no longer relevant for us in terms of buying, because it's been broken and the market has closed underneath that bar's lower limit. Okay, so this is now no longer an issue for us. It's not a buy zone. This now turns into a breaker block, which means that the market will use this level as a resistance zone to sell off, just like it would in resistance. If we did that too, for example, let's do it. It's better to demonstrate them together. So for example, this is your support. Once this support breaks, as you can see, it now starts to act as a resistance level, and the market is not closing above it. Okay, and the same principle applies for a zone. So if the market zone was here and the whole zone was broken, just like that support line, now that became a resistance level and this became a resistance zone. So once these zones have been broken, what you might want to do, is a good idea, is to keep it for a while, because if the market goes down and then it comes back up here, this is now going to be a sell zone for us. Okay, and this blue bar will probably be that manipulation bar, which we'll be able to take into account to sell it off. Okay, so I'm just going to recolor that so you can see much better. Let's do this purple. Okay, so now you can see we've got like two zones intertwined, but this will be the bar we'll take into consideration, and then we've got that support level, which will now become a resistance level. So if we do want to sell, we'd like to sell on the upper side of this rectangle, simply because it's closer to that resistance level 2 now as well. Okay, this is why having a zone and a line is quite useful. All right, let's take a look at NASDAQ. So with NASDAQ as well, here I've got a daily one. Doesn't matter, it depends on your framework, time frame that you're working on. I like to use the daily. For me, it's like very nice and clean. So this is one zone. You see how the market turned around and broke the support. So this is your support. Now once this is broken, the market closes below. This now becomes a sell opportunity for us when the market goes up here. So that's how you can pick these levels. Let's do Bitcoin. Here is Bitcoin. Let's turn that into a daily as well. And here's Bitcoin. Now as you can see with Bitcoin, the market has like really sharp falls here. Now, but this is an interesting one. You see this is the support level here. Okay. And what broke that support is the blue candle over here. That's the manipulation, the last blue candle before the breakout. Now as you can see, the market didn't hit that, but it was pretty close. Okay, it was pretty close there. Now one more thing I'd like to actually mention while we're doing this is this. Sometimes, for example, this is a good one here. Sometimes you'll have a blue candle, which is the manipulation bar, and then you'll have the red candle who went higher in terms of a wick and then started the downfall. What I like to do is I like to take on that wick. Okay, and if the bar is too big, you can push it up. Consider it like a long wick. Okay, because the blue bar, although it is known as the manipulation bar, doesn't necessarily have to be up to the blue bar here, because the market went higher. And whenever I analyze the market, I always like to see the highest it did. Why? Because when people put stop losses, they put it behind the highest level the market did. And this is why these levels will be prone to stop sweeps, where the market will come, it'll go up above this level, take everybody's stop loss out, and then they will go back down. So taking those levels is very important. So for example, same here, if I was to take this blue bar here, let's do this. Okay, so that's the manipulation bar here. Okay, this blue bar you can take no problem, simply because the red one afterwards hasn't done a higher wick, but in this zone we would have. So if I wanted to buy, for example, Bitcoin, if I was a buyer in Bitcoin, despite the fact that the market is going down, let's say I was bullish and I wanted to buy at a good price, this is a long wick which I would keep in mind, because the market has bought there twice. Okay, now you have to understand there are other few considerations we're going to keep in mind while doing these, but at the end of the day, all we're doing right now is looking at levels where the market bought heavy. Okay, see how this manipulation bar, the last red bar before all blue, going up, breaking the resistance. So market coming back down here is logical. Right? It's quite logical that the market can come back down here. Why did they buy here? Well, if I go back here, you see this little bar here. This is the bar that caused the breakout. This is called an indecision bar. The opening and the closing is the same, and the market shoots up afterwards. They dip into it, they go up. So knowing these levels beforehand is very important, because now we can understand how far the market can come back down. And if the market doesn't find buys around here, just like we saw with the previous example on Ethereum, the market bought, all the buyers are now gone, because there are no more buyers left at these prices. The market breaks down. So we could see the same thing here. In fact, we saw the same thing here with Bitcoin earlier. I'll show you that. And in my videos on Bitcoin, I had talked about this level here. I said, guys, this has been touched too many times. Once, twice, 3 times, 4 times, 5 times, and then it just broke. Just not enough buyers here. Okay, and then the market goes up into that manipulation zone, closes the gap, we're going to talk about that later, and sells off. Okay, once they start to sell, you have to understand you've got to be ahead of the market and look for the next levels where the market may want to come, because then you're going to target those levels. Okay, they're going to be your targets when you're trading. Let's take a look at SP 500. Let's do a 4-hour chart on this one. Many traders, day traders, use the 4-hour and the 15-minute chart. So let's take a look at the most recent chart here. What can we see here? So this is the 4-hour chart. Now, as you can see, we have, according to this, one wick there. Okay, and the market is still in that zone, as you can see, right? So we're still in that bar there. There we go, right in there, as you can see. So I've taken the low of that, the long wick, and we are in this zone. Now, if anybody wanted to buy, this would be their zone. Okay, and if you want to do it on a smaller time frame, you can. So now if we went into the 1-hour chart, this would be that zone there. So let's take a look. All right, there, and this is that red bar there, the manipulation. Okay, but remember, I always like to take the lower end of the bar. So that's the zone, that's your red bar there, causing the push up. and here we are in that zone. So as you can see, the market has a bit of buyers in there. Not very exciting, as you can see, over the past several hours, but New York hasn't opened up yet. Okay, here what we need to keep in mind is the zone where they sold off. Now if you take a look, how am I going to figure these levels out? This is the support, isn't it? This is why knowing support and resistance is important. The market breaks down, and the cause for it is this blue bar here. So this is going to be the manipulation. Okay, and that's the bar where the market can actually go up into and then sell off again. See how nicely they sold off? So by drawing all these levels in advance, I can understand where to sell, where to take profit, where to cover the trade, where to push it to one more time. So I urge you to open up a lot of charts right now and just pick these levels. Where the market sold heavy, where is the manipulation bar? Where did they buy heavy? Where's the manipulation bar? What is the support and resistance they broke? So that if we get back there, will it be a bar of interest for us? So if any bar went up, let's say, and the support, or went down in this case, it broke resistance, where would I sell again? And the opposite for the buying. Let's take a look at the euro dollar on a 15-minute chart as a last example. So if I wanted to buy again, where should I buy to go back up again? As you can see, this is the resistance level. Okay, that's your resistance. The market broke that, and your first red bar of manipulation is this bar here. Okay, you can see that red bar there. Now this is on a 15-minute chart, nice and easy. So market comes back and the market buys. Market comes back and the market buys. So when using timing, I would check if my trading hours matched these bars here. Let me just make the coloring a bit more appropriate for us, and let's turn that into a crimson. Okay, so that's the zone there. So if I had a trade hour there, if I had a trade hour, let's say in between those hours, I'd say, okay, let me buy here, and I'll put a stop loss here because it is in my trade hour zone. Okay, or you can wait for this bar to end and buy if the market retraces back again on a smaller time frame. So knowing these levels are very important, because then I'm going to use them with my daily trading hours, daily swing hours. Okay, alternatively, here's another one on the lower end. This is the manipulation bar. Whoops. Let's tighten this up a little bit. Okay, and that is it. So the market made a big jump here. So this zone is also going to be a place where we'll be interested. As you can see, just having a few levels is just fine, and as long as you can time it as well, if you understand that your trading hours, when your trading hours and your price match, you can get into the game and play along, and that's the best way to go. All right, that'll make your trading much safer and sounder. Like I said, take your time, do a lot of exercises, and the more you do, it'll become more obvious to you, and then the next step will be much easier.